Warning. This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Right, hello and welcome to Camel Finance. I'm your boy Camel, and today there's honestly not much work to do, okay? So I'm going to show you a few things that are interesting pieces of news, but as always, okay, cycles are king and cycles are in control, and I say this with respect, but I can see from my comment section, quite a lot of you need to improve your situational awareness. Now, I'm seeing comments like 70k rejected again, and I'm so sick of 66k Bitcoin, or 50k next, bro. Okay, but the reality is, it's FOMC tomorrow, okay, as I'm sure we know. They always play games, there's always volatility, there's always chop into FOMC and around FOMC, the same as the CPI data sets. And I'm here to say again, okay, some of us need to improve our situational awareness. If we think about it, what do we know about cycles? We know that cycles are in control and everything else is appended to explain away the price action from the cycles. So if cycles are in control, where are the current cycles and what are they implying we should be expecting over the coming sessions? Well, for stocks, for example, we are right in the timing window to see a cycle low. So if I pull up an S&P chart very quickly to provide us with some context, the cycles should be bottoming here. Now, of course, it doesn't mean we couldn't undercut this low and form a slightly later cycle low before we go. But it does mean that we are in that neighborhood now to be looking to get a second position on, okay, the cycles are bottoming. All we need to do is close the daily candle outside the downward sloping red resistance line, and we will have confirmed a new daily cycle. So regardless of what the narrative is out there, regardless of the rate decision or lack thereof cuts tomorrow or not, none of that actually matters, okay? What matters is where are the cycles, and at least for the stock market, the cycles happen to be in that neighborhood where they're looking to find a bottom. So it tells us that the risk here should be to the upside, not to the downside. For Bitcoin, okay, what do we know about Bitcoin's current cycle? First of all, we have a bottomed weekly cycle low denoted by the blue arrow right here, and we are early in the daily cycle, but moreover, okay, despite all the bearishness out there, despite people saying, oh no, we rejected 70k, 50k comes next, whatever your BS narrative is, okay, if we have contextual awareness based on the cycles and we grab hold of this low and measure out, where are we? Right around a half cycle low timing window, okay? Any candle over the next few sessions is likely to print a half cycle low. So again, the cycles are in control, everything else is appended to explain away the price action. But on a balance of probabilities here, just how it is silly, in my humble opinion, to be betting against upside in the stock market due to its bottoming cycles, I also believe it is kind of silly to be expecting new lows for Bitcoin since we are expecting a half cycle low any day now. So again, the context says to us, okay, that regardless of what happens at FOMC, regardless of the rate decision, regardless of any hawkish or dovish overtones from Powell and the Fed in general, okay, regardless of what happens, and regardless of the chop and volatility that may occur over the next 1, 2, or 3 sessions, the stock market cycles are bottoming. Thus, we should be looking for upside out of these cycle lows, not further downside. Bitcoin is already confirmed a weekly cycle low. It is early in its weekly cycle, telling us to be open to a full weekly cycle of potential upside. And we are right in the window to see a half cycle low bounce come out of here. Remember, the half cycle low serves to flush and reset the sentiment before the remainder of the cycle can play out. And even the precious metals, okay? We are getting close. We are getting close to seeing the daily cycle bottom and perhaps even find a weekly cycle low in the not too distant future. Okay, again, telling us to keep an open mind about perhaps seeing a favorable upside squeeze set up. Again, one more time for contextual awareness, the stock market cycles are bottoming. Bitcoin is right in that neighborhood for a half cycle low, and the metals markets are getting close to their cycles bottoming, both the daily and the weekly cycle. Even in the worst case scenario for the metals, and we've got an early week 16 cycle low, we are still very early in the weekly cycle for metals, and thus it's reasonable to be expecting further upside here, and at least until we get technical breakdowns and failed cycles, which we are nowhere close to as of yet. So how often is it that we find ourselves at an FOMC or a CPI data type deal, everyone starts to get shaken out, and once again, the Camel Crew knows about the cycles, the Camel Crew has the true alpha, and the Camel Crew can provide context to all of the bearishness and doom posting that is going on out there at the moment. Also, if you are bearish, well, so is Kramer, whatever his name is, okay? If you're bearish, if you were typing 50k next, bro, just know, okay, this is the team you're on. You are on team Jim Cramer. And once again, right in that half cycle low timing window for Bitcoin. And just for a bit more context, okay, if you're doubting that Bitcoin could smash 200k in a very short time, just remember that Nvidia went from a 1.3 trillion market cap, which is around what we are sitting at for Bitcoin today, to 3.3 trillion in just 6 months. Okay, if Nvidia can do it, why can't Bitcoin? If Bitcoin does the same sort of thing, we'd be at 180k right around Christmas, perhaps just after. So do not discount it. It is certainly not impossible. And right into the timing window for these cycle low shakeouts and half cycle low for Bitcoin, okay? Right around that FOMC where we know they play a lot of games and manipulate the media and the masses and the retail to shake out the weak hands and the people with no real strategy. We are also seeing a nice piece of FUD come out of the Bitcoin space because we got about $2 billion worth of the US Silk Road Bitcoin, which has just moved on chain. So people are speculating that given that DT was so bullish on crypto at the most recent Bitcoin conference, people are speculating here that the opposing party are potentially going to dump all of this Bitcoin just to spite DT. And that's certainly a non-zero probability. But the reality is, okay, they didn't move this onto a exchange getting ready to dump it necessarily. It just seems that the government has split the 2 billion into 2 addresses. And it is currently believed that this represents 10,000 Bitcoin deposit to an institutional custody service. And it's also likely that the US Marshal Service is sending Bitcoin to Coinbase for custodianship, not to sell it. Okay, so again, more FUD. And for people that know about the daily volume of Bitcoin, it can hoover up 2 billion no problem at all. Okay, 2 billion is not that much, right? We can get through that. It's not going to tank the price to 50k, and the cycles do not support it either. Meanwhile, at the same time, we are watching game theory play out in real time. After the US has been talking about a Bitcoin strategic reserve, we are now seeing Hong Kong lawmakers following suit in proposing strategic Bitcoin reserves. Okay, so gradually, then suddenly, and remember, none of this has to happen. The market just has to believe it's going to start pricing it in. I've got quite a nice thread here from Raoul Port, and I bet you'd never hear me say that. And I actually agree with a lot of what he says. I just think it's going to happen a lot quicker. So macro summer is beginning to take hold and should last for the rest of 2024 and into 2025. Okay, that's a point of contention for me. Like I said, we'll get to that in a minute. But the 2-year yields have formed a large top with a potential objective of 2.5%. So yes, I agree. As you know, we've been well on top of this. Tell that to the bond market, right? The NDX, the NASDAQ, has also probably completed its healthy correction. I actually agree, okay? I think we got a daily cycle low. I think we're about to confirm it. We just got to get through the chop and the games of FOMC. It happens to be the perfect timing for this to occur during election years, as you can see here, okay? And this move right here, not dissimilar from what I'm expecting, to be completely honest. Daily cycle low, big blow off top squeeze, okay? Weekly cycle low, and then here is another point of contention for me. I do not believe we continue up. I actually believe we roll over. But at least in the short to medium term, okay, daily cycle low to be confirmed any day now, in my humble opinion, looking for a big parabolic blow off top. Bitcoin is soon ready to break the giant cup and handle and head into the banana zone. Again, I agree, okay? That right there, according to Camel, is a weekly cycle low, getting ready to see something like this over the coming sessions. And gold should see its next leg higher soon. Of course, if we start to cut rates, whether that happens tomorrow, at July's meeting or at September's meeting, okay, cutting rates is historically very, very bullish for the precious metals. And again, we either have an early week 16 cycle low, or we're about to find a slightly better, in my opinion, week 22, 24 cycle low, and then look for a big, strong, rip-roaring rally into the end of the year. Meanwhile, inflation is starting to plummet, okay? It's coming down very rapidly now at 1.62% according to Trueflation. So again, the Camel Crew has been on top of this, right? When everyone's talking about sticky inflation, okay? We've been saying the whole time that we are going to get continuation of disinflation before ultimately a short period of asset price deflation. We're starting to see this manifest now. And Raoul Port is also calling for the dollar to be weaker and for them to start to ease, which could drive the Dixie lower. I've been saying this over and over again. I would love to see that. But this is a point of contention for me as well. I really don't think we're going to see this. I do think it's possible we get a sharp dive down and a V reversal out of the dollar, but that is to be determined. So you can see we actually agree with quite a lot, okay? The only thing I think is different here is I think all of this is going to happen much faster than people are ready for. I don't think this bull market runs well into next year by any stretch of the imagination. And of course, I am open to being proven wrong, okay? If we get a few months into the future and this bull market is still tearing ahead, no sign of a big blow off top, no sign of a recession, no sign of any cracks in the economy or whatever, if we get there, I will hold my hands up and say, okay, I was wrong about my timing, I was wrong about this idea, and will remain long and strong into next year, okay? But I am here to suggest to you, based on what I'm about to show you in a minute as well, that this bull market doesn't have the legs it thinks it does. And what's really very spooky to me is about 18 months ago, I was talking about getting to this exact time frame, July, August, and I was saying I will start to be calling tops. I will start to be saying the tops and the recession are close, and every man and his dog will disagree with me. Every man and his dog will say, no, Camel, you're crazy. We're going to keep going up into next year. Why are you trying to pick tops this year? We've got until the end of 2025. I literally said that is what people will say to me, and that is what I'm getting at the moment all over the place. Everyone keeps saying, oh, Camel, you're calling for tops too soon. This bull market's got plenty of legs. I'm here to suggest to you it probably doesn't. And the more one-sided sentiment gets, the more likely it is that I am correct in my posture in this is the exact same thing as down at the lows. Every man and his dog was too bearish at the lows, and I was saying, we're going to rip to all-time highs. Everyone said, you're crazy. I said it with Bitcoin. We're going to get an all-time high before the halving. People said, it's never done that before. Why are you trying to be different? What even is a left translated cycle? Why are you inventing terms? Okay. And the reality is, this is just how markets work. As we approach tops, sentiment gets extremely one-sided. Nobody is calling for tops in the next couple of months. Everyone thinks this bull market's got legs. And again, I am open to being proven wrong. I am open to staying long and strong well into next year if the market proves me wrong. But for now, I remain steadfast in this posture until invalidation occurs. And the New York Fed multivariate core trend inflation has just been released, okay, at 2.1%. Meanwhile, we've got a Fed funds rate at 5.375% with lags of 18 months. Wall Street is worried about a 25 basis point cut on Wednesday with the yield curve inversion rivaling 1929. Okay, I keep pointing to this yield curve. The yield curve is undefeated when it reverts and accelerates back above the zero line. We are extremely close to that situation today. The damage has already been done and the Fed is already late. Okay, because the Fed is already late, I don't see an argument for this bull run running into next year. Again, open to being proven wrong about that. Time will tell. Look at this. Okay, does this look like it's going to just stop here at 2% and hover? Does this look to you like sticky inflation? I don't think so. All of the data I've been presenting the entire time says we're about to slip into even deflation for a short while. And again, everyone is out here calling for things like hyperinflation of the dollar, okay? No. The risk here is deflation, not hyperinflation. And again, with inflation plummeting, a recession is coming. And remember, inflation is plummeting because the economy is rolling over. The Fed is horribly late and it will have to panic cut if it doesn't do a quarter point cut tomorrow. If it waits until September, it's going to be even later than it is now. It's going to be multiple months later than it is now. And then it's going to have to start to slash these rates incredibly quickly, which of course will signal to everyone that the economy is in bad shape. And of course, the reason they are late is because they always look at inflation as a gauge for when to adjust rates. But this is like driving a car forwards whilst looking out of the rear view window. Okay, I've been saying this over and over again. People keep looking in front of their noses instead of looking out into the future. Okay, the M2 rate of change was signaling this was coming for a long, long time. Meanwhile, everyone was too busy looking right below their nose and arguing with each other about how sticky inflation is, comparing fractals to the 70s when we got a double pump and talking about hyperinflation. Okay, it never made sense to make these kind of arguments. Can we get hyperinflation or severe rounds of inflation after a deflationary bust? Yes. Can we get a big recession, a huge stock market crash, and then see a big QE bomb, which ultimately 18 months later manifests as a huge secondary round of inflation? Yes, of course. That's actually the call, and that has been written on the side of the melt-up chart the entire time in pink text. Second line down for anyone with an eagle eye. Okay, market finally bottoms when the Fed launches a record QE 10 or 20 trillion. I also expect once these rates have been slashed to zero for them to end up at about double or perhaps even more than double where the Fed funds rate is today. I would not at all be surprised to see 10, 12 or plus percentage interest rates at the Fed funds. Okay, I would not at all be surprised, but this is much later in life. For now, we got to focus on finding tops. For now, the risk is not hyperinflation or sticky inflation or any of this. The risk is that they over tightened, they were late to react to inflation. Inflation is now dealt with, inflation is now well on its way to deflation, and they are still being stubborn in their posture unless they cut by 1/4 percentage point tomorrow. So it's a seriously wild time to be alive. This, in aggregate with everything else I present, particularly on the weekend's deep dive, is the reason I don't believe we're going to see this big bull market run well into 2025. And the more people tell me I'm wrong about that, the more I sit here with increasing confidence that I am indeed correct, because the market is slowly but surely becoming very, very one-sided, very, very extreme in sentiment, and consensus in the market is that this thing cannot possibly top this year. We're also starting to see cracks appear in other places, such as McDonald's reporting its first global drop in its sales since 2020. This is likely a sign and is likely going to continue to be a sign. So as I said right at the start, there's not much to do, right? There really isn't, because we've got to see the FOMC decision tomorrow. We're going to expect a whole heap of chop, even be open to another low. It would be perfectly legal and qualifying if we get an undercut into Wednesday or Thursday. Okay, that would only be day 42 on Thursday. We can run as late as day 44. But like I said, the cycles are bottoming. We are getting ready to pull the trigger. We are getting ready to add the longs, and in the NASDAQ, especially in the members section. The gold cycles are bottoming. Bitcoin's right in that neighborhood for a half cycle low, with a whole heap of people getting ready to be shorting this thing into oblivion based on FUD circulating about the US about to dump $2 billion worth of Bitcoin, or the Fed and whatever narrative it can figure out from tomorrow's FOMC. But the reality is, okay, the setup is clean, the cycles are bottoming, the cycles tell us to be cautiously optimistic here, and if we can just get through the FUD and the chop and the FOMC games, then again, this is just business as normal for the Camel Crew, right? If you've been here for any length of time at all, you've heard me say all these same things around every month. When we get to the FOMC, we say the same things, we posture the same, and we continue to capture the cycle lows as they evolve. So what a wild time to be alive. Sit tight, don't cheat your bags, okay? Respect risk, respect stops, stay out the way of the FOMC volatility, and as ever, keep that contextual awareness, keep hold of the cycles, understand where we are, and everything is going to be all right. I'm your boy Camel. I hope you have a great week, and until next time, take care from me. All the best. Cheers. Bye.